Assalamualaikum and hello, my name is Fitrie, Kajool, Ayumy, binti Darussalam. Today I will explain what is the financial management and the three methods of taxation and depreciation. Financial management also means planning, organizing, leading and controlling the financial activity of the enterprise. It means applying general management principles to the financial resources of the enterprise. For the depreciation have two parts. Firstly is annual depreciation or AD. It's an annual allocation of cost of an asset over its useful life. It's a non-cash expenses. Secondly is accumulated depreciation or ACD. That is a total allocation of the cost of asset from year 1 until the present year. Depreciation will reduce the book value of an asset. There are three methods of depreciation. Firstly is straight line methods or SLM. On SLM, we'll have the same annual amount of depreciation or AD throughout the useful life of the machine. Secondly is a double declining method or DDBM. On DDBM, the rate applied is twice to straight line rate for the depreciable asset. Adjustment is needed if the asset is not fully depreciated under this method. Lastly is sum of year digit method SYDM. On this SYDM, annual depreciation AD is greater in the early years than the later years, and the salvage value is dedicated from the cost of asset. For taxation, taxation is referred to action of taxing authority imposes a tax, and also individual and corporation must pay tax on any income derived from their activity. There are two types of taxation. Firstly is a corporate income tax. It is imposed on ordinary income, operating income, earning before tax, or taxable income derived from business operation. Secondly is capital gain tax. It is imposed on capital gains or profit when a firm sells assets more than original purchase price. However, the proceeds from sales of assets has impact on cash flow as it creates either the tax liability or tax shield. Tax liability is increased the amount of tax corporation has to pay to a taxing authority. Is arise if firms incur losses in business operation of capital losses. In taxation also use a same method with a depreciation to find the tax liability or tax shields. For the stimulation that we do, I provide recommendation annual depreciation of the straight line method or SLM because it's offered the lowest total tax liability to the firm.
Assalamualaikum. My name is Siti Nur Ain binti Roslie. My matrix number 2018297392. I'm from class BA119 for A1. Today, I will talk about chapter 4 and chapter 6. Chapter 4 is about the risk and return. Risk and return that can be defined as an actual probability of return that differs from the expected return. The higher risk, the higher the return. Meanwhile, the lower the risk, the lower the return. Next, I will talk about chapter 6, which is about financial planning of the use leverage. Based on the questionnaire that has given, I have used two alternatives, which is break-even analysis and operating financial leverage. In the first question, it asks to identify variable cost per unit. As shown in the question diagram, it has been shown that fixed cost or FT is RM 50K, sales per unit or Q is 20K, selling is 10 ringgit, meanwhile variable of cost per unit is not set in question table. The second question, the question asks to find the break-even point in units and also in ringgit. In finding break-even points in units, I use a formula in the form of. Meanwhile, to find break-even point in RM, I have used this formula. In the third question, I have used operating and financial operations in type of operating leverage DOL type. In order to find operational leverage level DOL at the sale level of 20,000 units, I have used the formula A equals to the 1.333 times. Next, in exercise 9, I will use only one alternative in chapter 6, which is point of indifference. POI is a point where the EBIT and EPS of two different financing ventures equal. In the first question, they want to find of indifference between the two alternatives in EBIT. So to find that, I will use 7 steps and I get the total EBIT, which is RM 2025 ringgit. I suggest choose plan 2 because they will provide higher earning per share for the shareholder. Thank you.
Hello, my name is Farneyla. I will continue to discuss the next exercise, which is exercise 5 and exercise 6. Exercise 5 is about the rate of return. We need to calculate the expected value, variance, standard deviation, and coefficients of variation for both projects, which is project C and project D. Total expected value is sum of probability multiplied with actual return. So project C total expected value is 34, meanwhile project D is 27.5. Second is total variance. The sum of probability multiplied with bracket actual return minus total expected value square. The total variance for project C is 304 and 256.25 for project D. Next is to find the standard deviation. The answer in variance need to square it. So the standard deviation of project C is 17.44 and 16.01 for standard deviation project D. The last is coefficients of variation, which is standard deviation divided by total expected return. The project of C is 0.513 and project DCV is 0.58. Last but not least, Solar Limited should accept to invest on project C because of the lower coefficients of variation. Next is exercise 6. Exercise 6 is about cost of capital. For this exercise, we need to find the after-tax cost of debt, the breaking points, and the weighted average cost of capital. The after-tax cost of debt for first 1 million is 3% and at the range of 1.01 million ringgit until 4 million ringgit, the cost of debt is 4.5% and 5.63% for more than 4 million ringgit. Second is the breaking points for each sources. First, the breaking points for debt is 2,500,000 ringgit. Meanwhile, the preferred stock is 20 million ringgit and the breaking points for common stock is 10 million ringgit. However, there are four ranges of financing, which is the first financing range is 0 ringgit until 2,500,000 ringgit and the WACC for this range is 7.95. Second financing range is 2,500,000 ringgit until 10 million and the WACC is 9.5. Next is the third financing range is 10 million ringgit until 20 million ringgit and the last financing range are more than 20 million ringgit. In this case, the WACC for this third and fourth financing range is same, which is 9.55. That's it. Thank you.
My name is Zal Rabiattul binti Rohijan. So in this video, I will explain about the exercise 7 based on the chapter 5 about the cost of capital. There is a 5 step. For the first one, the source of capital for company coming from the following long-term financial securities such as bond or debt, preferred stock, and common equity, common stock plus retained earning. After that, I will calculate the cost of long-term financial securities, which is KBAT, KPS, KC, and including KRE. Furthermore, I will calculate the WMCC to know the rate of return. First step, making draw an investment opportunity graph based on the rate of return that I get. In final step, I make better financial decision which one of the company.
Assalamualaikum, my name is Ellyia Maisarah binti Jeffery and I'm going to present about exercise 10. Briefly explain 4 reasons for merging. The first reason for merging is synergy. This refers to economies of scale and operating economies that result from combining two companies together. Economies of scale provide efficient production facilities, raising of capital, setting up research, and also development facility or marketing center. Operating economies could take form of eliminating duplication of activities such as production, marketing, financial, and also personnel facilities. Second is tax consideration, which a highly profitable firm may acquire smaller company with large amount of accumulated tax losses to shelter its own income and therefore reduce its tax liability. Next is diversification. This is effort held to stabilize the firm's earnings and reduce the overall risk of the firm by involving in business activities that has negative correlations with its current business. Last but not least is maintaining control. For maintaining is some firms make use of merger to reduce the chance of their firm being taken over. Such move may involve issuing large amount of debt in acquiring another firm and thus make it less attractive for potential takeover. This is known as defensive merger.
Company should be invested based on the rate of return and higher than that.
Next is I want to present about exercise 11. In exercise 11, need to calculate post-merger earning per share for acquiring company. To calculate this, I use 4 steps. For the first step is need to know the company first. Second step is need to find the ERE for both company, which is the formula is EPS for company A divided EPS for company T. The third step is need to find the NOSO, which is number of share outstanding. To calculate NOSO is value of common stock divided by par value. And the last step is need to calculate post-merger EPS for both company. And to find this is you need to use this formula and the answer is must be in Ringgit Malaysia.
Next, I will explain about the exercise 12 based on chapter 7 about the mergers and acquisition. Based on the exercise, I need to prepare on the second method, which is the pooling interest method. There is 4 steps. For the first one, determine the bulk of company known as acquirer or target company. The second step, exchange ratio based on the ERE EPST divide EPSA. Other than that, in step 3 there is 2 methods. To find new NOSO T, the old NOSO times ERE. Last but not least, I will prepare the post-merger financial position. For Metro using the pooling of interest method. So that